everyone, welcome to Buy Now Sell Now, the weekend edition. I'm Mubina Kapasi, and boy, what a week it has been for the markets. We saw the Nifty scaling past the 9600 mark, though we did short shop on Friday, just 5 points shy of that. The Sensex, however, managed to scale past the 31,000 mark. We have an action-packed show for you today. However, we'll be discussing, of course, lots of viewer queries. So let's get on right with it. Today, of course, on the show, we'll be discussing Bajaj Corp. We'll also be discussing Cox & King as well as Bharat Forge. And of course, later on during the show, we'll be discussing our fundamental guest's wealth creation ideas and what would be in his portfolio. So let's bring on board our two experts who are going to help us out and help our viewers out. Rahul Randeria, the technical analyst with IFCI Financial Services, joins us on the show on the technicals, as well as Siddharth Sidani. Hello gentlemen, welcome to Buy Now Sell Now weekend, and let's get on board our very first viewer query. We have Madhavi from Mumbai, who says she has bought 500 shares of Bajaj Corp at 340 rupees per share. Her question is, should she hold or sell? She has a 1-year time horizon. Well, she's making some money over there because currently, or rather she's losing some money because currently the stock is trading at, well, close to about 360 rupees. So just about 20 odd rupees of gain seen over there on 500 shares that she owns. Rahul, let's go across to you first. What's your technical take on Bajaj Corp?
Good evening, Mubina. If you look at Bajaj Corp, in last 2 months, the stock has been hammered down from the levels of 435, and recently it has made a low around 358 or so. The setup seems to be oversold, and we could see some sort of technical pullback from the current levels. The only concern in the stock is that the stock trades with shallow liquidity. The liquidity is not that much encouraging. So the moment we see volumes coming in the stock, we could see a technical pullback from the current levels. Hence, I feel that she should hold with a stop loss of 340. And on the upside, I feel that in the short run, maybe 1 or 2 months, stock has potential to test the levels of 385. So I would recommend to hold with a stop loss of 340 on the downside.
Okay, hold on. In fact, Rahul is advising and suggesting that the stock may actually touch levels of 385 rupees. Siddharth, what's your view then on Bajaj Corp? Seeing the fundamentals, the fact that, consumer sectors are slowly seeing a recovery post-demonetization, would you advise keeping Bajaj Corp in the portfolio?
Well, we would advise for Bajaj Corp, one should keep holding, the investor should keep holding the stock. We have a buy recommendation with a target of 465. If you look at the dividend yields, it has strong dividend yields. Along with that, return ratios are also strong. And as we know that rural economy, there can be a good revival. So FMCG space can see some kind of attraction. Company foraying into global markets, which is expected to aid the growth for the company. So one should keep holding Bajaj Corp.
Okay, that's a view coming in on Bajaj Corp. Let's move on to our next query. We have Kamindu Roy from Pune, who has sent in the query, and he says he's bought 50 shares of Cox & Kings purchased at 231.15 rupees per share. His question is, should she hold or sell? Time horizon of 1 year. Well, our investor here is losing some money over there because the stock is currently trading at just about 217 rupees. So a bit of a bothering point for Kamindu. Rahul, let's go across and take your opinion first. Cox & Kings, how do you like the stock?
Yeah, the stock has been moving in a range from 197 on the downside till the levels of 247 for quite some time. Recently we have seen that stock was in a corrective mode, and last 2 days we have seen some sort of technical pullback from the lower levels. The stock has taken support from the levels of 200 moving average, and we could see some sort of pullback from the current levels. Hence, I would recommend that again, as the stock is trading in the range, and currently the setup is near the lower band of the support line. So I feel that stock could again rally from the current levels and can test the levels of 242 on the upside. So maybe from investment horizon, one should hold with a stop loss of 197.
Okay, so you can hold on to Cox & Kings as well, but let's understand a fundamental perspective on the stock. What do the future prospects look like? Of course, do you remember Thomas Cook, one of its very close peers had come out with its numbers. It was a decent set of numbers. Siddharth, what do you make, however, of Cox & Kings within the space?
Well, if you look at Cox & Kings, the outlook for FY18 seems very robust. Company has been fairly doing good. If you look at it, has increased the bookings coming from the schools. Apart from that, global international bookings have also started, and we've seen strong demand coming in for the company. GST and demonetization, both the factors helps the company as a kicker to boost the growth for the company. We like Cox and Kings and have a buy recommendation with a target of 358.
All right, that's a view on Cox and Kings. I hope we've been able to answer your query. Let's move on and bring on board our next query of the day then. And it's coming in this time around. Of course, it's coming in on Bharat Forge. Nagesh from Hyderabad sends in his query. He wants to know, should I buy Bharat Forge as a long-term investment? What are the technical and fundamental views? Well, Nagesh, you've sent it right at the right place. Rahul, Bharat Forge on the charts, how does it look?
Yeah, recently in the last 4 trading sessions, we have seen the stock has rallied from the levels of 1020 and it has almost seen a rally of 120 points in the last 4 days. So the setup is positive. Momentum in the stock is also for, because 1020 is a multiple support area, and many times the stock has tested those levels and bounced back sharply from those the current from those levels. Now, if you look at the long-term charts, it feels that this momentum could be extended further. But at current levels, I would recommend to buy on dips, maybe around the range of 1080 to 1070 with a stop loss below 1020, because long run I feel that the stock has potential to test its lifetime high of 1368. So any correction in the stock should be used to enter at the lower levels with a stop loss of 1020 on the downside.
Well, fairly optimistic commentary coming in from Rahul on Bharat Forge. Use any dips to actually accumulate and build on your portfolio for this stock. Let's understand a fundamental perspective as well. Do remember that it had come out with its Q4 numbers and it had been an inline set. There was broad-based recovery seen all across. So, Siddharth, what's your opinion? Is this a stock that you should hold on to in your portfolio?
Well, one should keep holding Bharat Forge for long-term perspective. It is one of the top ideas of ours. We believe Bharat Forge can deliver good set of numbers going forward also, and in fact defense can contribute around 25-15% kind of a growth for next 2 years for the company. Even the performance of the company will be good and demand will be cropping up well, and the kind of thrust government has in terms of defense, I think Bharat Forge seems a very good bet with 6 months to 12 months horizon. One should keep holding, investors should keep holding the stock with a target of 1500.
Okay, I hope we've been able to answer all of your viewer queries. Thanks for sending them in. For now, let's slip into a short break. When we come back, we'll be discussing Siddharth Sidani's wealth creation ideas as well as what are the stocks in his portfolio. Don't go anywhere. Welcome back. Thanks for staying on with us. This is Buy Now, Sell Now weekend, and as promised, let's go across to a wealth creation portfolio. Siddharth Sidani, in fact, is now going to recommend and tell us what is the stocks that he would like in his portfolio. Siddharth, let's start off with the first 3 stocks in your portfolio. What makes it to the list?
Well, the first 3 stocks of the portfolio is more dependent towards monsoons and the rural revival. The first company which we like, which should be included in the portfolio or the basket for investment, is UPL. Again, in the agrochemical space, company has been consistently gaining the market share. If you look at the quarterly performance, profits have increased more than 100%, 135% to be precise on a YOY basis. We like the company. Management is also optimistic about UPL going forward. Margins can be near 22 to 23% for the company. Of course, the recent Brazil issue and the depreciation of the currency, what we believe is it would be beneficiary for the company. In fact, they would be increasing their revenue contribution from Brazil. So all in all, it looks very positive for UPL with a target of 1095. Second idea would be Emami Limited. Again, from an FMCG space, one should keep accumulating this stock with a target of 1400. If you look at the organic and inorganic volume growth has been coming good for the company. We believe with a medium to long term perspective, volume growth should be around mid-teens. The acquired brand, that is Kesh King, is also contributing big time in terms of volumes are concerned. Even the management guidance is around 15-16% organically growing for next 1 year. So Emami Limited in the FMCG space should be the second company to be included in the portfolio. The third company should be Dalmia Bharat from the cement space. Again, as we spoke, if monsoons go well and rural revival comes in place, infrastructure and building up of real estate would be a big time project which would be going on. Mid-cap cement company likes of Dalmia Bharat fits the bill. We believe overall performance was very good. In terms of Q4 was also 94% higher in terms of profits on a YOY basis, and overall volume growth was also a boost by 17%. This kind of a performance is expected and sustainable going forward. So to build a portfolio, I think as a cement play in mid-cap space, Dalmia Bharat fits the bill.
Okay, UPL, Emami as well as Dalmia Bharat, all of them are stocks that Siddharth Sidani would like to be in his portfolio. Siddharth, there's also Cyient from the IT space, kind of a shocker over there. PI Industries as well as Supreme Industries. What's the rationale for these three stocks?
Three set of stocks for the portfolio is from the companies are few of the leaders in their market space in the industry. The fourth company would be again Supreme Industries, a leader in the PVC pipe segment. Overall perspective, what we believe is company has been doing good in terms of products, in terms of value-added products. In fact, they have increased their share in the value-added products to 37%. Margins also in the last quarter, that is Q4 FY17, seen as an improvement by 200 basis point. And the company plans to come up with the PVC gas cylinders also, where they have got an order from Bangladesh. Overall perspective, what we expect is 14% CAGR profit growth for next few years. So Supreme Industries also can be played out in terms of rural, because it is one of the leaders in PVC pipe segment. The second idea would be PI Industries, again related to rural. A company is agrochemical as well as CSM, again one of the leaders in India for CSM business. As we know, the order book is swelling in the CSM business, and for that margins are also improving for the company. Overall perspective, what we believe is 10 to 12% growth in FY18 is expected for the company. So in terms of CSM business, which China was at certain point of time was leader, PI Industry is really getting the traction going. PI Industries in terms of CSM business looks the most attractive in the space with a target of 1003. And the third company would be Cyient in the mid-cap IT space. The worries of H1B visa, which is coming out from the US administration, impacts this company the least, is just because of 80% of the on-site job has local recruits. So Cyient is expected to increase its margin by 50 to 70 basis point in coming quarters. So in terms of taking a contra bet with a long-term horizon for a year or two, I think Cyient in the mid-cap IT space fits the bill with a target of 625.
Okay, and Siddharth, of course, you have spoken about Bharat Forge, Equitas as well as Voltam Transformers. All these as well are on your list. What's the rationale?
The last set of three stocks comprise of Bharat Forge. Now we know it is one of a strong defense play in terms of private segment is concerned, and they are expecting this business to grow 15% for next 2 years. Apart from that, what management expects is the kind of transformational shift in terms of technology also they're doing would be benefiting the company. In the traditional set of business, US and Europe has been doing fairly good. So Bharat Forge with a target of 1500 should be taken care in terms of investment with a year or two perspective. The second last idea would be Equitas from the NBFC space. We believe Equitas is completely a strong play in terms of operating leverage is concerned. It has a small finance bank license, already have around 300 odd branches set up, and the company is expecting to set up further branches during this year. Equitas strong AUM, and we have been expecting a strong AUM growth on a YOY basis, although the last quarter results were a little subdued in nature. But if someone looks at the stock with a 1 or 2 year perspective, this would be one of the leaders in the NBFC space. So look at Equitas with a target of 265. The last stock recommended in the portfolio would be Voltam Transformer, again a company which has been growing really very well. If you look at the profits for FY17, the company has posted 54% growth in terms of on a YY basis. It has a strong order book, healthy balance sheet. It's a debt-free company. Overall perspective, what we expect a 24% growth in coming 2 years in terms of bottom line is concerned. So all the 9 stocks one should look at investing as a portfolio, as a basket with a 1 to 2 year perspective, and expect a healthy return out of this.
Okay, there you have it. That's of course Siddharth Sidani's model portfolio. Just to reiterate the stocks that he would like on his list: UPL, Emami, Dalmia Bharat, Supreme Industries, PI Industries, Cyient, Bharat Forge, Equitas, as well as Voltam Transformers. But do remember, this is a model portfolio. Please do consult your individual investment advisors before taking any investment decisions. We'll slip into a short break, but when we come back, we'll be addressing the markets as well as getting you some more technical as well as fundamental picks. Don't go anywhere. This is Buy Now, Sell Now weekend, and let's talk markets. Boy, what a week it has been for the Nifty as well as the Sensex. After all the give and take, we finally shut shop for the Nifty at 95.95, just 5 points short of that 9600 mark. Though, of course, we did on Friday scale past that mark on an intraday basis, and similar was the move on the Sensex as well, where we scaled past the 31,000 mark. So, new psychological levels being breached by the benchmark indices. And mind you, it was quite a volatile week because the first 3 days of the week were quite sluggish. We did see the Nifty actually lose off quite a bit of steam, but yes, we managed to recuperate quite a bit on the last day of the April series as well as on the first day, or rather last day of the May series as well as of the first day of the June series. So let's dissect down the technicals as well as the fundamentals of the market. Rahul, a good up move seen last week on the Nifty as well as the Sensex. Where can we go from here on?
Yeah, Mubina, frankly speaking, on the last 2 trading sessions, if we see, I was quite cautious and bearish, but the market has given a stellar performance from the levels of 9339, and we have seen almost 250 points rally in the last 2 days. Looking at the current pattern, you know, the price has little bit overstretched on the lower degree charts. So current week we could see some sort of profit booking or sideways movement in the Nifty as well as in the Bank Nifty. But one should keep a focus towards the stock specific action. Momentum could on the upside we could see some sort of attraction coming in the Nifty around say 9630, 9640 odd levels. On the downside, the crucial supports are placed at 9500. If we look at the Bank Nifty as well has also rallied significantly from the levels of 22,450 till 23,300 odd levels. So we could see some sort of again a sideways consolidation in Bank Nifty also. So I would recommend to just keep focused towards the stock specific action, and one should avoid or one should wait for a decent pullback in Nifty as well as in Bank Nifty to enter into the lower levels.
Okay, that's a technical take on the market, and frankly, you know, everyone was actually taken by surprise by the kind of rally that we saw in the last 2 days of last week's trading week. Siddharth, on the fundamentals, do you think that, you know, we have overstretched ourselves when it comes to valuations? What is your view on the markets?
Well, in terms of market, the fresh triggers which is there in front of us would be monsoons. Of course, it has hit the Kerala coast, which is again a good news. Before time it has come. So monsoons, how the monsoons unfold and how GST is implemented is key trigger for the market in the medium term perspective. Overall Q4 numbers were more or less okay, in line with the expectation. So markets are well stacked up. There is a possibility that there's some kind of a small profit booking also may emerge, but I think that can give a great opportunity for participants to participate in good quality companies and accumulate them with a long-term perspective.
Okay, that's a call coming in on the markets, on the technicals as well as on the fundamentals. So let's pinpoint and tell you what are the stocks that you must of course keep your eye out on when trade opens on Monday, and how can you benefit from the rally that we've been seeing on the markets. First up on the technical side, Rahul, run us through what exactly are the stocks that you're identifying that look good on the charts.
Yeah, Mubina, I have 2 trading calls, short-term position calls. First call to buy is in Hindalco, where the stock from the last 4 months we have seen the stock has been consolidating in a tight range of 178 on the downside and 204 on the upside. But this time I feel that, you know, stock could break out from the current levels and inch higher in the coming days. Overall chart seems to be a flag pattern, so the stock is on the verge of a breakout. Hence, traders can buy the stock at current market price and on corrections to 194. My short term immediate positional target is 210, and one should place a stop loss below 198. My second buy call is in BHEL, where the stock has seen a severe correction in the past 7 to 8 trading sessions, and on the weekly chart it has formed a hammer with a lower shadow, which indicates that there has been strong supportive buying seen in the levels at the lower levels from the 150. So we could see some sort of rally coming in from the current levels. Hence, traders can buy the stock at current market price and on intraday corrections to 152. My short term positional target is 178 with a stop loss of 148 on the downside.
Okay, so Hindalco as well as BHEL are the two stocks that Rahul is recommending on the technicals. Siddharth, over to you then. If investors do want to look to park their money in the equities for the long haul, what would you recommend?
Well, if we talk about the 3 stock ideas, the first idea would be Gabriel India from the auto ancillary space with a buy recommendation and a target price of 164. Again, we've seen a lot of volumes coming in from the passenger vehicle and commercial vehicle side, which has propelled the revenues for the company in the current quarter. We expect margins to expand going forward. In fact, so they've received some kind of orders from the two-wheeler companies likes of Eicher and TVS Motors. Indian Railway gives a strong opportunity to the company in terms of going forward. Strong order book is expected. Company is going into a capex of around 50 crores for increasing their R&D capabilities and improving their quality going forward. The company is looking very good in the auto ancillary space with a target of 164. The second idea would be KEC International with a target of 325. If you look at the earnings, 91% jump in earnings was noticed, which is something substantial in nature. Overall perspective, a strong order book company has. Overall perspective, what we believe is 15% sales growth is expected for FY18, and we expect 20% profit growth for the company in coming year. 18 times is what company trading at for with FY19 earning expectation. Overall perspective, KEC International has strong order book coming in flow, and post the UP new government coming in place, I think order book is expected to swell further. One should look at in this space companies like KEC International with a target of 325. The last company would be Finolex Cable with a target of 640. Again, we know that this company is a leader in terms of electrical and communication cables are concerned. But apart from this, company is pouring into CFLs, LED lamps and many other things, and company is planning itself to come out as a tag of being a cable company to a complete solution electrical company. We believe that this company is getting into fans and switch gears and already launched in the recent time. Company has an potential to grow with heater segment also. So water heater is also one of the product which is there in the radar for the company. Overall perspective, if you look at the valuations, our sense is this company is very well placed in terms of the segment is concerned, trading at 20 times FY18 and 17 times FY19 earnings. We like Finolex Cable in terms of a mid-cap, sizable mid-cap company with a target of 640.
Okay, Gabriel India, KEC International as well as Finolex Cables are some stocks that Siddharth Sidani is recommending from a longer term point of view. Thank you, Rahul as well as Siddharth, for joining in and helping our viewers out, and of course addressing the markets and giving us your top picks. With that, it's a wrap on this edition of the show. Thank you for watching and have a lovely weekend.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.